Warren Buffett is one of the world's most successful investors, and the man who famously said, "Be fearful when others are greedy and greedy when they are fearful," now appears to be fearful. The chairman and CEO of Berkshire Hathaway had cashed out nearly 60% of the company's investment portfolio at the end of June, according to an SEC filing, and this $122 billion cash pile was pretty unusual for Buffett. The 90-year-old business tycoon usually puts his money to work through acquisitions, stock buybacks, or equity purchases, so it looks like he is preparing for the worst. Buffett has been talking about a stock market crash for a while now, and here are 10 reasons why he is predicting it for 2021. At the end of June, Berkshire Hathaway had cashed out nearly 60% of its investment portfolio according to an SEC filing, and this had many wondering if Warren Buffett was preparing for a market crash. He isn't called the Oracle of Omaha for nothing, and also successfully prepared himself and his company for the last market crash back in 2008 by storing up excess cash, which he later lent out to struggling firms like Goldman Sachs and General Electric. Buffett is well known for his patience and has an eye for a bargain, which is why everyone is looking to the seasoned investor during what would become the next big financial crisis. Buffett often measures the health of the market by looking at its capitalization compared to GDP, and when this so-called Buffett Indicator is unusually high, it means that markets worldwide are overpriced compared to the underlying economy. Just before the dotcom bubble burst in 2000, the Buffett Indicator came in at 146%, and in 2007, before the financial crisis hit, the figure was 135%. Right now, that ratio sits just above 180% and will likely rise even more within the next few months as the battle against the pandemic continues. This will bring down the economy even further and the stock market upward, which means the market is likely to collapse in the near future. While the Buffett Indicator is a good way to evaluate the general health of the market, it isn't enough to predict a downturn, let alone a crash. However, there are other factors that suggest a sell-off is imminent. For one, there are the interest rate cuts, with the Federal Reserve dropping the federal funds rate to levels not seen since the financial crisis of 2008. US banks have gradually been cutting interest rates for a while now in hopes of maintaining a stable economy, but this year's pandemic as well as the US trade war with both China and Europe have had further impact on the markets and caused a lot of turbulence. If no progress toward a solution is made in the near future, the US economy could be hurt significantly enough to trigger a prolonged stock market slide. Although Warren Buffett is an optimistic man in the long term, he has been more cautious about what the crisis could mean for the near future. In comments at Berkshire's shareholder meeting in early May, Buffett talked about how we have all embarked on a journey we didn't ask for, and that there is an extraordinarily wide variety of possibilities on both the health side and on the economic side. He added that no one can really predict what is going to happen since there are so many possibilities of things that could happen both on the health side and in terms of the economy. There is no doubt that the pandemic has already had an impact on the economy, and there is still a great deal of uncertainty ahead, which could further destabilize the market. When talking about the unpredictable future ahead of us, Buffett also acknowledged that the worst case and best case scenarios may have been eliminated, but there are still a great many possibilities out there. This uncertainty makes it especially difficult for a value investor like Buffett to make smart buys, of course, because even though there are various possibilities in future cash flows and earnings, a lot has changed in the past months. One example is the airline industry. Buffett has made it clear that he still has faith in it, but also believes that it has fundamentally changed. By now, it should also be clear that demand for flights, especially international flights, will be down for the foreseeable future, which is particularly difficult for an industry with high fixed costs and has left basically all airlines in a precarious financial situation. The coronavirus pandemic came unexpected to all of us, and as Warren Buffett mentioned back in May, there's a lot of uncertainty still ahead of us. And despite Moderna announcing a successful phase 1 vaccine trial several months ago, we still don't know if there will really be an effective vaccine within the next year or two or ever. No one can predict how long this pandemic will greatly impact our lives, if there will be more waves of infections or another lockdown, with businesses having to close once again, which would definitely cause even more trouble for the already struggling economy. Warren Buffett has been talking about the market being overvalued for several years already, so it is not surprising that he still believes that stocks are overpriced, which means the possibilities for near-term earnings are looking rather grim, and the uncertainty makes it incredibly hard to accurately predict what will happen in the future. A lot of companies have been in distress at one point or another during this year, but Berkshire didn't lend money to companies in need of support as it did during previous financial crises, by taking favorable stakes in the form of preferred stock and warrants. Buffett said that they simply hadn't seen anything attractive and revealed that the Federal Reserve had stepped in to help out businesses that may have otherwise come to Berkshire for support. The business tycoon added that he had indeed received calls from companies hoping to get some financial aid by Berkshire, but since none of them were appealing enough, Berkshire didn't make a move until the second half of this year. Buffett also explained that this situation showed how many companies are unfortunately in trouble now because they didn't do their financing earlier. Back in 2000, Warren Buffett warned Berkshire Hathaway stockholders that overstaying the festivities, that is, continuing to speculate in companies that have gigantic valuations relative to the cash they are likely to generate in the future, will eventually bring on pumpkins and mice. He added that they knew this but were afraid to miss a single minute of what is one hell of a party. Therefore, the giddy participants all plan to leave just seconds before midnight. There's a problem though. They are dancing in a room in which the clocks have no hands. He was of course referring to the fact that no one knew when the dot-com bubble they were in would burst, and a similar thing is happening right now, as we are clearly in some version of a second technology bubble. We already had a scare when the tech started crashing at the beginning of September, and even though it didn't instigate a full-on market crash, the signs for one are visible. Of course, a market crash is not something that happens suddenly, coming out of nowhere and being too fast to escape. The infamous dot-com bubble of 1999 to 2000, for instance, didn't really burst but actually took around 2.5 years to deflate fully. During that time, ordinary investors had plenty of opportunities to get out with most of their winnings. However, things are different this time, since this situation is something none of us have ever experienced before, so the crash might happen a lot faster this time, or the next few months could just be the start of it all with worse things still to come. Even though Buffett has been dealing with stocks for several decades, he is not a fan of market timing and has often said that he doesn't know a single person who can do it, adding that he may have acted too soon during the last financial crisis, for example. This comment referred to purchases Berkshire Hathaway made in the fall of 2008, which, as it later turned out, they should have made a few months later. In fact, the experienced investor made some of his best deals toward the end of the crisis, such as, for example, in 2011 when he bought $5 billion in preferred stock in Bank of America, yielding 6%. This deal has netted Berkshire more than $20 billion, including some investments in Bank of America later on. So it seems like Buffett is fairly good at timing his purchases, and the fact that he has hesitated to buy a lot so far this year may mean that he believes that better opportunities will present themselves as the crisis plays out. During the first months following the beginning of the shutdowns, Berkshire didn't make any purchases, since for struggling businesses, liquidity was likely to be even tighter a few months later, and it seems like Buffett is still very careful to make a lot of investments, which seems to indicate that he believes the worst is still to come. This year, Warren Buffett did something that he perhaps has never done before. It was the opposite of what he normally does, as he sold a lot of stocks. Berkshire Hathaway went on an outright selling spree, reducing many of its stakes and kicking a number of stocks to the curb. Then they bought a gold mining company called Barrick Gold Corporation, which was a big surprise since Buffett is known for not being a fan of gold. This was quite obviously a defensive move, a safety measure, and it wasn't the only defensive move either, as Berkshire also added 4.2 million shares to their Suncor Energy position. Precious metals and energy stocks are known to perform best during the very last stages of the market cycle, often right before a market crash. So the fact that those two were among the few purchases he made this year is definitely something to think about. Berkshire also bought shares in Kroger, the supermarket chain, which is another defensive move since people will always need to buy groceries regardless of how the economy is performing. Overall, out of 22 stock transactions Berkshire Hathaway made until the end of August, 17 were sales and 3 of the 5 purchases they made were defensive moves. Buffett's portfolio has not been this defensive since about 2006 or 2007, so this seems to be another indicator that he is preparing for a market crash. While there's a lot of uncertainty and a lot of signs point to a market crash waiting to happen in 2021, Warren Buffett has held on to his usual optimism about the American economy. He said, "We haven't faced this exact problem. In fact, we haven't really faced anything that quite resembles this problem, but we've faced tougher problems. The American miracle, the American magic has always prevailed, and it will do so again. This is not just patriotism speaking, as US stocks and the economy have always bounced back and continue to grow over the long term. In 5 or 10 years, this current crisis may turn out to be nothing more but a dip in the market. But with so much uncertainty ahead, it is hard to say what the future will hold, even for the Oracle of Omaha."